Wants to come in. Good evening, everyone. Hope everyone had a great day today. We've got a treat for you this evening. As like I said, people coming in, we'll take our time here. Let them come on into the room. Here in West Central Indiana, it's been a rainy, drizzly day today. We're still in the 50s, maybe low 60s. But we are going to warm up next week into the 80s, dry out, and we should get some field work going next week. So I know it's been tough for a lot of the folks in the Midwest, and I don't know how you folks out west in the high plains are doing it out there. I mean, you're just burning up. So I hope you're getting some rain sometime soon. All right, we're going to get started here again. Rick Clark with Farm Green Podcast. Thank you so much for being here. We've got a real treat for you this evening. We've got a longtime trader here, Nathan Redding. He's actually an Indiana boy, so that's a good thing. And we're going to get started here. So as my usual thing, it's giddy up, let's go. Nathan, how are you doing?
I'm doing well. Thanks for having me.
Good. Well, thank you for being on. We appreciate this because we need all the diversity, not only in the fields that we can get, but we need the diversity on this podcast. So this is going to be about marketing and how to look at these markets and what happens around the world triggers events that happen here. So I'm going to ask you, Nathan, the first question I asked everybody on the podcast: what is on your mind right now?
Yes, one, I hope the dog doesn't start barking again.
That's okay.
And two, I hope he doesn't ask me anything about agronomy.
Yeah. No, we won't do that. It'll be just markets.
No. From a market standpoint, it's been really challenging, I guess, last 3-4 weeks. And I think the participation levels as low as we've seen it from the speculator side in a long time. So,
and that's not good.
Yeah, it pushes so much more liquidity at the computers, and you could see it in little instances. I mean, if you sit there and watch all day long, you can see it. In the last minute, you saw meal go down $1.50 and up $1.50 over the course of 1 minute, and it's just computers unloading on each other. And I mean, there's no price discovery in a fundamental sense that deserves that type of movement, but that's what we have.
So let's just stay right there for a moment. How do we play ball? I mean, how do we play ball without getting your face ripped off then?
We work with a lot of farmers, large size farmers, and one of the things that I guess we try to stress is, rather than worrying about how high can it go, where can it go, we're all businessmen. I manage multiple businesses outside of the marketing stuff, and one of the main things I always want to know is, one, am I going to get return of capital, and two, return on capital. And right now you have a extremely high cost, high risk situation to put an acre of grain in the ground, corn, beans, wheat, peas, whatever it is. But you also have a tremendous price to sell into, and a multitude of tools at your disposal. So there's a big part of it is, how do you structure your portfolio or your grain position to be able to stay involved in the market, but also put some floors in place where you've got return on your risk.
So talk us through that. How would you set up a mid-sized farmer's program? What would you do?
It's got to be actively managed. But first step is, how much can you put? What kind of cash do you have to put in place? You can't just jump into this and say, I'm going to hedge my corn with futures, and realize I think it's $4,000 per contract to hedge a bushel or a contract of beans, $28.50 on corn. Those numbers are rough. I'm not reading off the screen, but just guessing.
That's about right.
It's extremely expensive, and on top of that, you got to pay every penny if it goes up. So then, what are your other tools? You got elevator contracts, you've got basis contracts, And then just build it out from there. You've got crop insurance, which needs to be part of the position depending on your risk profile. And so this early in the game, we'll do 20, 30, maybe up to 40%, depending on geography of forward sales. And then we'll move to paper until we really feel like we know what's coming off the field.
So at this point, I mean, obviously, okay, so let's go back to the beginning and I'll come back to my question here. So you've got to gather a lot of information you need to know what his crops are, his acres are, and then do you help these folks through also with the insurance decisions, or are you leaving that up to them and then they tell you what they did?
Depends on what level of service we're into. So we have the subscription service where we'll give you information and it's yours to take and run with. We have a light touch where I don't work with any farmers direct personally. Some of the team that I work with, Susan will work with people in implementing a strategy, but they still call the elevator, make their sales, run their own book. But she is there to explain, diversify away from, like, if this program doesn't work for your farm because you plant all bottom ground, you don't want to be 40% sold before it's out of the bag. She's there to help work through that. Then we have other programs that will do everything. And so it's a multitude of levels, depending on what the guy needs or wants.
I see.
And then we have just, if people want exposure to the market, we have ability to offer that too, just from a trading standpoint. So
perfect. So you've got, it's an a la carte of anything and everything from low risk to high risk, all the way, top to bottom.
Well, it's low touch to high touch, I guess. The risk is always there. Everything's, yeah. I would consider everything right now medium to high risk in this environment.
Yeah. So if I've understood you correctly up to this point, with the market action you've seen, you have advised to be 40% sold cash to this point. Is that right?
Well, so we're diversified. So corn, we're going to be only about 30% right now, but then we've covered the rest of it with put options, with the idea that we are at extremely high profitability, or high price levels. Profitability is subjective, but you're at a level that we spend very, very little time up here. We have a seasonal tendency to start to fade as we get into safrinha harvest in Brazil, U.S. plantings going in the field. Yes, there are things outside of the normal year with the Russia-Ukraine, the dollar-real spreads and interest rates going up and costs have gone up. But all these variables that guys want to tell us about why they don't want to sell, our opinion is a lot of that is priced in. The market prices risk so much faster now than we've seen. And I've been trading almost 20 years professionally, and I would say this is the fastest I've seen a price risk ever. Price risk, price events.
Yeah.
And so our portfolio approach is, look, we're going to put a floor on all this corn. The corn bean ratio is down to 2, which is historically very low. Beans are cheap versus corn. We're 40% priced on beans. We haven't pressed the bean button to go all the way yet. And just because you have puts doesn't mean you're completely covered. The biggest mistake I see is guys buy an option and just let it rot off. That's a sin, really. You've got to actively manage it once you go down that road. So you put it on. We'll use short-dated expiring stuff to reduce costs, increase some of the gamma or the reaction to the market, and then we'll adjust as we go. If we get a big swan dive, we'll sell puts against, or we'll lift it. If it goes up, we'll roll it up. It's a conservative approach to try to stay engaged, but not just break the bank with constant activity.
Right. Yeah. You don't want to, you're not churning and burning in those accounts.
That's some of the worst thing you see out here.
Right.
Number of turns per year needs to stay really low. It's more about being effective.
Right. Yeah. I mean, the farmer's got enough to worry about. He needs to be able to relax and understand that he's got himself hedged, if that's the word we want to use here. and protect it a little bit against some of this market movement. But yet, if the market still does rally, you've got room to take advantage of some of that too.
That's the goal, and you're never going to get it all. And
No,
you'll have those discussions, and it's really hard in this business of working with a producer who, he wants and deserves everything he can get. But if you do some prudent business management decisions now, and let's say there is a drought that we cannot foresee, or there's a crop failure in Brazil as they finish their pollination, the filling stage here, and all of a sudden corn's $10. Were we wrong for selling and locking in a $7 floor that was $300 to $400 an acre profit? Yeah, I guess so. At that time you are, but that is new information we didn't have, and so it's a no-win situation.
right.
But I view the downside risk as more hurtful than the upside loss of opportunity.
Well, let's talk a little bit about how close the world is knitted together here, and we're all tucked in bed at night and sleeping just fine, and you wake up tomorrow and the market is 180 degrees of where it was when you went to bed. So why does this happen? I'm assuming Europe comes online, and then you see a push in volume for a while. Walk through how we're all intertwined now. What's happening here?
Well,
And just pick a market. Just pick a market. I don't care what.
I can tell a couple pretty, pretty pertinent stories to just that. You go back to 2018, kicked off the trade war, right? So it was the Monday after Easter, or the Friday before Easter, Thursday before Good Friday. You have the USDA report, the big crops, acres and stocks report comes out, wildly bullish, markets just rip. Go home, 3-day weekend, come in Monday, market's kind of up or down, but it didn't really give much up after a big day Thursday, and that's usually a fairly friendly signal to the market. And we've heard bits and pieces coming into this that China and the US aren't getting along. About 1, 2 a.m., this is when I lived in Colorado. So 1, 2 a.m. Mountain Time, I wake up and I've got this weird feeling. What? Mm-hmm. So as always, I check the phone. Beans are down 46, I think. Corn's down 25. We're sitting, at the time, we're managing a position in JBS, an internal hedge fund, basically. And the amount of money lost in that short little bit of sleeping was the most I've ever seen disappear in my life.
And you never even got to feel it. You were sleeping the whole time.
Well, I woke up and it was like, I don't even know if I have a job now. So, it just the massive change that happens. And it was President Xi and Trump had kicked off the trade war. She said they're going to start tariffing U.S. soybeans. And we went into one of the lowest export seasons of soybeans. And for the next 2 years, the market was driven by tweets and theories, and the S&Ps almost just got thrown away.
Yeah.
And so that's why. So the reason I tell that story is it's not. You don't always want to talk about the good days, but that is the type of risk you get into when you get into super high prices like we have right now. When you get into geopolitically led events like we have with Russia, Ukraine. You had, what was it, last week, I forget the day, Malaysian or Indonesian government says we're not going to allow refined palm oil to be exported now.
Right.
It suddenly pulls a huge amount of edible oil off the market. Bean oil is on fire, ripping and roaring, and bean oil spreads are going. You don't see these things coming. Well, for everything that's bullish, there's eventually going to be a bearish offset. And that's why it's really hard for me to look at 750 new crop corn and say, we're irresponsible if we're not doing something to protect a $300 to $400 an acre profit today.
Yeah.
Regardless of the unknown to come.
Yeah. Yeah, I totally agree. And I think you've got the same scenario with soybeans and the same scenario with wheat as well. But, the thing that I want to talk about here also is, if you protect yourself more with paper, than say cash sales, then you might not get yourself into as much trouble at the elevator. For example, the wheat, who knows how many bushels a farmer's going to have. If he's got a bunch of cash sales on, he can wind up getting himself in trouble. So talk a little bit about cash sales versus then more protecting versus futures or options.
Oh, wheat's a great one to really talk about. Poor wheat farmer, maybe one of the bravest farmers out there, because
Yeah.
you may have a great crop all the way till harvest, and then it gets a rain and it sprouts and the falling number drops and quality kills you. So we all know that. I don't need to talk to the farmers about that, but cash sales at the elevator are great. But you have to remember, when the elevator buys that grain, they sell futures immediately.
Mm-hmm.
There is no gain. They don't care if the futures are up or down. I ran the hedge desk for Consolidated Grain and Barge for 2 years. If I wasn't there, there's two people just sitting there. As soon as we are over a half a contract long, instant market order to sell. They're just constantly keeping that position flat. Now, if they want to take a flat or a spread position, they'll do so in a separate account, but they don't play around with flat price. So they have a short hedge. And then if you have a crop problem, what happens? Markets go up. Their short hedge is causing a margin call in their books. You don't have the grain to offset the margin call. They have a problem. That's why they demand either reparation for the hedge, the difference in where it was hedged and the market value at the day of, or show up with grain. And so you got to be prudent with pre-selling too much. And really, you got to watch these, I call them crazy. I shouldn't put my opinion on it really, but these double up type contracts, or they're basically short call based contracts where it sounds good when you put it on, but behind the scenes, what's happened is they've sold 2 calls and you have to own into that call if you don't have the grain. And it's just really dangerous. So it's kind of like a seatbelt that doesn't, or an airbag that doesn't go off when you need it.
Yeah.
And so to bring it back to the original question, the options and futures allow some flexibility because you don't have a physical grain commitment. You can double click and be out of that position, or call your representative and say, I want out, market order.
Yeah.
Until you get into a Russia-Ukraine where that wheat market just blew up dollars at a time for days. That's a rare event. In that case, then your futures hedge is pretty punitive because you're experiencing what the elevator is.
Right. And then there's another caveat to throw into that. That's basis. So, for example, there was some information came across the wire today that a processor in Eastern Midwest, I don't know who it was, it just said the Eastern Midwest, is now bidding 75 over July futures for soybeans. Mm-hmm. So that right there, and now couple what you just described with now hanging on to your cash crop, now you can take advantage of that basis play.
Correct. Now that's it takes a lot of financing to do this if you're going to manage it on paper, but it's something to plan for. But we're moving to the age where the farmers are becoming the grain elevators. There's enough, you drive around Illinois, Indiana, there's more and more grain facilities going up every day. We own a millwright business. I think we're putting up 9 grain lakes this summer just for a small little millwright business. And it's amazing the amount of infrastructure being built by the farm. That infrastructure is it's good for one thing, speed of harvest, but 2, basis arbitrage and manage of carries and inverses. Yeah. And if you're going to build the big $1 million facility, you need to operate it like a grain elevator, which means you don't hold grain through an inverse. If you do, you better have a pretty good bullish stance on the basis long term and manage accordingly. And so, like the bean processor, I know who you're talking about. Good friends with the guys, but they what they're finding is we had this huge influx of price. Beans went from 12 to 15, 18 bucks. All the beans moved to the commercial. The exporter came in. China has been buying beans hand over fist Jan, Feb, March, when they usually shut it down the end of January. All of a sudden here in the Eastern Belt, which is very heavily export dependent, through January, and then the beans go to the processor. Well, they all move to the export market, or they're short basis to the exporter. This processor didn't have enough days on, or yeah, it's not that they did something wrong. They just weren't able to get enough days coverage on.
Right.
And so they're having to pay for it. And they're paying through and creating the inverse, despite July Nova or July SEP at 40 some cents, or
Right.
122 cents. Sorry. You got huge inverses here.
Yeah. And that then is how a farmer can take advantage of that storage you're talking about. And I mean, when I was growing up, Dad always said, I will carry grain all the way to August, because you just don't know what's going to happen. Now, not everyone can be in that kind of a cash position, but if you can be, you know, cash becomes king. That's the old saying, cash is king. And then you get some crazy things. And I think you're going to see that happen this year, because I want to go down to South America now. Let's just shift and go there. I mean, they're going to run out of beans in their shipping lineup 3 months sooner than normal. So that's going to shift everything back to the U.S.
I think so, but you also have to remember, U.S. is doing a huge amount of Feb and March business, which has delayed their start of their window. Now they've been crushing those beans, but their crop, they lost 25 million tons out of South America in general. So yes, at some point, there will be a shift back to the U.S. earlier. Normally our window's Oct-Feb, Oct-Jan. I don't know if we won't see some August SEP cargoes. I know we're already putting some August SEP cargoes on the books, which is kind of a spread gamesmanship. You sell August 15, SEP 15 lake hand, and then you declare the boat for either an August or SEP, depending on how the July-August spread trades. Now, that was a whole lot in a little bit, but sorry.
Yeah, you need to explain that. You need to explain that a little bit more detail.
Sorry. This is where I need Susan. The lady that works for me always throws the flag at me when I start talking in tones. But when I said that, so you said when an exporter sells usually a 30-day window with 15 to 20 days declared, 30 days prior to the start of shipping.
Okay.
So what happens a lot of times in these swing periods, the old crop to new crop, August, September swing, is the buyer will say, I want August SEP, and they'll put together a package. Maybe they're going to sell August 15, SEP 15, pick 20 days out of that window. You have 30 days prior to day one to declare.
Okay.
And so they use that to determine how long can they pull from Brazil before they have to switch to the US, and also how do I want my spread position to be if I'm long July, August bean spreads, and so on. And
so who is this information being reported to?
well, it's just nobody has to report it. It's the exporter does the deal with his customer. It's just like if you and I decided to put a trade together, we don't have to report it to somebody. So
Okay.
Zeno, Bunge, ADM, somebody, their head soybean traders talking to a head trader in China, and they go back and forth. They determine a price, payment term, shipping window, and all that. And they make an export contract. Well, then the selling desk, the US selling desk, will report it to the USDA as August or September, depending on what they feel the best chance of that'll ship it.
Okay, so that's when we will see it then hit the news wire that there was just 1 million metric tons traded to China.
Yeah, and it's not done as 1 million metric tons. It may be, this desk does 202 or 55 to 65,000 ton boats. They have to report 110,000 tons because everything over 100 has to be reported. But if the buyer is in, they may buy from 5 different export desks at the same time, because they're trying to lock in a basis at this level. And if they buy from multiple places, it keeps the market from running up on them. Because the minute you make the sale as the exporter, you go into the barge market, the train market, you send your 100 grain elevators out to the farmer, and you go try to sweep the table.
Now the flags are going up, and everybody downstream knows what's happening now.
And that's how, if we see the SIF market go 30 bid on 35 and all of a sudden the 35 offers are gone, we know something is most likely happening on the export desk to make them want to buy those offers.
See, yeah. See, how can now? Can anyone see that information, or how are you paying for that information?
No, I spent 11 years on an export desk, so that's kind of how you understand the system. But to see it, you'll see it reported on Reuters and some of those places, but they don't know whether to report the bid or the offer.
Yeah.
You have to kind of understand how things are going, and you can see different places once you get into into the industry, you can see where those numbers come from.
Yeah.
And we use them internally for helping manage basis decisions and spread decisions, but we won't publish it publicly, no.
Yeah. Well, tell us a little bit about your training days. I mean, how were you, I think you were trained at Zeno, is that correct? Is that how you kind of got your teeth cut, or was it somewhere before that?
I spent a few years at a small brokerage in Milwaukee, Stuart Peterson Group, and then I had interned at CGB when I was in college at Purdue. I spent a semester and a summer at CGB in Cincinnati.
Oh, okay.
And started learning the grain merchandising business there, and stayed in touch with those guys while I spent first 4 years out of Purdue working with the brokerage business, and kind of built a business with them that I'm rebuilding now after 15, 18 years of professional trading experience.
Right.
But then I went to Zeno, and that's where I really kind of learned.
So tell us what you did. What happened? I mean, you were running some big numbers at Zeno, right?
Yeah, Zeno has, I think, statistically the world's fastest ship loader in the world. So we can load basically a Panamax a day, if not a little more.
Oh my God.
As I was leaving, they were adding a second barge unloader and additional capacity with the labor. So we were, if Slater hears me, he'll correct me, but I think we could do 12 million tons a year out of Zeno.
Wow.
About 500 million bushels. And so that's, if you want to break it down, a barge is 55 to 65,000 bushels, a train's 400, depending on beans or corn, 110 cars, it's about 440,000 bushels. If everything was humming and you had a boat at the berth, you could unload 210 car trains and 26, 27 barges. I think they're up to over 40 barges now, plus the trains.
Wow.
And it's an amazing amount of volume.
It's crazy. And what's the location? Is this at the Gulf? Is that where this one is?
Yeah, Convent, Louisiana. It's
Yeah.
It's 164 miles in on the Port of New Orleans.
Okay. Okay. I mean, and we've got ports in the Northwest, in the Seattle Northwest, right? Or Pacific Northwest. And I assume we can go out on the East Coast too. I mean, there's just grain moving or coming all the time.
Don't forget the lakes. Yeah.
Well, yeah, on the Great Lakes. Yeah.
You got Houston, Galveston, New Orleans. There's a little bit in Mobile. You got Georgia's got a small one. Wilmington, North Carolina. Plus there's some more in that area. Those are all small, but New Orleans is the hub. That's the main shipper. PNW be your second biggest grain port. You got containers going out of Long Beach and East Coast. And then you've got the lakes, you've got trains into Mexico, trains into Canada. So
Yeah.
there's a lot of grain. It's still a small portion compared to what we crush for ethanol.
Right. Right. Well, okay, let's talk a little bit more about markets, and let's talk about what would be some strategies for some. I mean, Nathan, these markets are they're just crazy. I mean, I've traded a long time, and I am. There's days I'm just perplexed on what's happening here. So, what can we do as farmers to protect ourselves? I know we've skimmed over it at the 50,000 foot, but I mean, can you go down and give us a program? You know, we're gonna, and you just got to work with me here on some, you know, he does have some crop insurance and 2,500 acres and blah blah blah. So can you just say what how are you going to build your floor? What percentage of each crop are you going to do? What are your vehicles you're going to use? Just stuff like that.
Sure. I guess for one of the main things to do is really understand. Everybody's got an idea. I know you don't know your cost to the penny, but you're running a business. Have a budget. Have an idea of what good looks like, right? I mean,
Yeah.
you hear that a lot. It sounds very buzzwordy, and I hate it, but it makes sense. You need to know, is 100 an acre profit or 200 an acre net of everything, is that good? If it's good and the market's offering it, then that's something to at least put in the back of your head of, maybe I need to do something, maybe not. Then every day you got to assess, what are the fundamentals saying? Right now we are at prices we have not seen other than 2 or 3 other times. We are in a volatility environment that is extremely frothy, that you have a lot of government intervention. I told the story earlier about the Chinese trade war starting. I'm not predicting that. I'm just saying that is something that can hugely change the market. Government interest rate policy can be a huge change to the market, just in a macro sense, where we start to put this stock market in a bear market. Go back and look at the 08, 09 transition from bull market to bear market. I think corn went from $6.50, $7 to $2.50. So that's not to predict that will happen today, but those are the risks that happen when governments get involved.
Yeah.
And so knowing what good looks like and having some sort of concept of how am I going to lock this in if and when the time comes is the start. Now, I mean, we always have the conversation with the guy that says, wish I'd never done nothing, I'd be a lot better off today. That's going to work, and it's going to work and work and work until it doesn't work. And then when it doesn't work, can you survive that? And some guys can, and that's great. You have a different risk profile. The guy that's heavily leveraged, has just gotten started, or owes a lot of money to the bank. I mean, who knows who you are and why you're there? It doesn't matter. You have to recognize that and say, what am I doing to take advantage? If $300 or $400 an acre, whatever it may be right now, is something in front of you, I'd go back and challenge you to tell me how many times in May you had that offered and how often you took it home come October.
Yeah. I think I read the other day, Nathan, that I think we've been at these levels over time 1% of the time.
I'd be surprised if it's that much.
Yeah, I mean, that's not very much. That's days. That's just days
Oh,
out.
And I mean, we joke about it, but markets take the stairs up and the elevator down.
Yeah.
It's so true. And you look at the market structure, okay? You're at a 730, 740, 750 price point. I just got done saying at the start of this, the participation level is one of the lowest I can recall, at least from the crowd people I talked to. Was mostly ex-commercials, now fund managers, trade their own money, or manage proprietary books. And almost all of us, to a man, are trading 10 or 20% of the value at risk that we would normally trade. And even that's scary sometimes. Mm-hmm. And so that money's not in there. That's not creating liquidity. If you get a event where you have basically blown out all the spec shorts, the spec longs are still there. The person selling right now is the farmer, Brazil, or US hedger. And the minute the market gives a bearish signal, who knows what it'll be, because if we knew, we already have reacted. If that buying group disappears and the spec turns around and says, I need out, that's when you get these air gaps down. You have to find somebody that's willing to take the risk to buy today with the confidence of over 50% confidence, otherwise I think it's a stupid trade, that they're going to sell that to somebody else at a higher price later. And if you are at this one top 99% of the market and you're expecting somebody to pay up yet again for your entire crop, that's a business decision you're making, but make it for the right reason.
Right. So help us out now. What could we do? Are we gonna, or do you ever sell calls? Or are you always a purchaser of calls?
I hate courage calls. I've done it selectively. I hate naked short options even more for a farmer. I'll rarely ever do them myself as a speculator. Only time I'll sell calls would be for a farmer would be in a call spread or long futures covered call. And even then we get back into that airbag that doesn't go off when you need it to.
Yeah.
It sounds fun to say, I'll let them call me out of this until you have to pay the margin call all the way up to it, then get called out, watch the market go through your strike, and still wait for that time erosion to come and pay you off. In the meantime, you're paying margin calls into it.
Yeah.
And so it's a really, really tough thing to manage mentally. And so I try to avoid it.
Yeah. Well, yeah. Being short calls is like being in the actual naked futures position. If the market goes against you, then you're penny for penny along for the ride. Yeah.
It's
Yeah.
like that, except you don't get the reward if you're correct.
Yeah, that's
The market
true.
goes down, you get a finite reward versus a full coverage position.
Yeah, that's true. So what should we be doing? Buying some puts here?
They're so darn expensive, but I think it's prudent for getting into this planting window. Let's get a look at the next 2-3 weeks weather, fundamentals, and then react. So we use a lot of short dated options to reduce the amount of money we got to put on the table. So like if we buy short dated July puts today, we're watching that week by week. We know we have till June 22nd before they expire. In that last 30 days, the time value of the theta erosion is tremendous. So we're going to keep that in the back of our mind. And if we get another week and a half down the road, and we're not getting the type of movement we need, we may rake them off the table and sit back and look again, or sell a put underneath them to reduce our money on the table. In which case you create a fixed risk position, put spread, but we'll actively manage that position. We won't just put it on and let it rot off and then get to June 22nd and say, darn, that didn't work. Let's go wind up and throw another 40 cents at this thing, because they are so expensive. Right. But you have these inflection events. Last year, the high for corn was put in on the USDA report, I think 10th of May. Not that history will repeat itself exactly, but look at the setup we have right now. We have a Brazil crop problem that we've kind of priced in. We've got this Russia-Ukraine thing that it doesn't even make the top of the Wall Street Journal every day now. It's becoming kind of old news, despite how tragic it really is. And
right.
You've got a U.S. planting weather market that's added some premium. And I mean, I'll joke, planting markets are the greatest ones to sell. Planting delay markets, just find me a time where you haven't got the crop planted. And the amount of premium that gets thrown at it versus the amount of risk it really represents, I think, is something to keep in mind.
Yeah, that's a good point. It's I think as a farmer, I think your mindset is always to the long side because you want the market to go up, but you see what we forget about is we're already long the cash. So
how many years?
Yeah.
For years.
Yeah. So we kind of forget about that. So maybe a person needs to think about what kind of a position would a person look at to protect maybe not this crop, but maybe the next one as well. I mean, we don't know what's going to happen, but it's like you said earlier, Nathan, if you're at a level here where you're going to make money, you've got to lock something in.
Now, you may not have to lock it in, but you need to make a conscious decision why you're not.
Yeah.
Fundamentally, I can make the argument that 735 new crop corn, where we're at right now, is pricing a ton of risk in. And if we get 91 million acres of corn, 180 yield, we're probably $1 too high based on everything that we can talk about today.
Yeah.
If we lose 5 or 6 bushels an acre, we're probably $2 too low. Mm-hmm. And that is such a dichotomy, but is that dollar downside risk, which is, I mean, I usually am going to hedge myself with the idea that things are going to grow, we're going to get it planted, and we're going to have a pretty darn good yield. We did not have a stellar growing season last year. We had a record yield.
Yeah.
So
Yeah.
I don't really want to bank on the tail risk side with my entire production.
Right. Well, let's talk about something else we haven't talked about yet. Let's talk about the US dollar. Now, the dollar has a lot to do with this. And as you know, if people pay attention here, the markets have been struggling here the last week or two or so. And what's the dollar been doing? It's just been on a like you said, a stair step up. So what do you see? How do you see that playing out as foreign trade? I mean, this things are getting a little dicey. I mean, we don't know if China's going to stand with Russia. We just don't know what's going to happen here. So what? How does the dollar now come into all this?
Well, let's answer that two ways. One, we got to understand that where is the dollar's place in the world? Is it changing or not? And two, for now, for this crop year, we are going to price export grain in the world against the dollar. Dollar being strong is a very nasty macro negative fundamental to the grain markets.
Right.
We have enough corn in old crop to handle all the ethanol, all the domestic feed, and everything in the US. We have enough beans for the same purpose, maybe less so because we exported so many in Feb and March. But a strong dollar, as soon as it started doing that, pull it up here so I can speak wisely about it. The US went from competing on the export market at huge elevations, which is where we can buy SIF NOLA beans, sell FOB NOLA, or SIF NOLA corn, sell FOB NOLA beans, to we are 50 cents behind the world land at Asia in 45 days. So the dollar is, I mean, had a huge move today, reversed yesterday's low. Since the beginning of April, it's up almost 5%.
Yeah.
And that is in currency terms in the world's major currency, that's huge. And so what's happened is the real has had the opposite effect. The real has weakened versus the dollar. The Brazil farmer who was sitting on his hands and not putting grain in the market because he's actually getting less reais per bushel today than he was when futures were $2 lower in a different currency scenario this time last year.
Yeah. Now wait a minute.
He's saying, "I'm not selling."
Yeah. Think about what you just say that again. Say that again because of the U.S. dollar and the relationship.
Dollar real spread.
The spread
has moved to the point where futures roughly $2 higher now versus this time last year. The Brazil farmer is still getting less in their local currency than they were this time last year. So they're not excited about these prices.
No.
Now, in the last month and a half, like we said, the dollar's moved 5%, the real has weakened. That has changed. He's now starting to get very, very strong prices. He's letting some beans fly. He's letting some corn move.
Yeah. Yeah.
And it's a big deal. And we used to build our balance sheets. The US was the residual supplier to the world. We're the most expensive port to call. We're the most expensive grain to grow per acre. And so we are usually the seller of last resort. Brazil will empty all their reserve stocks. Argentina will empty theirs, and Ukraine will empty theirs. Talking about corn. Now, with Ukraine locked up, potentially 33 million tons off the world market, the question the market hasn't answered, or at least from the commercial side we haven't said or figured out, is how much Ukraine corn is going in the ground, how much is getting out of the country. They may plant 80% of their acres, but if it's not getting out of the country, it's not helping the world balance sheet.
No.
And in which case we may come calling for US corn, in which case you'll see massive inverses. Doesn't necessarily mean a flat price move, because the world corn balance sheet says we have this corn, we just don't have it now. And so that's where your spreads come into play.
Yeah. Yeah, you see that? God, Nathan, there's so many caveats you have to, I mean, you just can't look at a couple of things. Well, we had great exports this past week or whatever. That doesn't tell the whole story because of what you just explained. that world balance sheet has not changed one iota, even though there's record amounts of corn leaving the U.S. Now, I'm going to assume, though, that if you have another weather issue with the safrinha crop in South America, I mean, some of this is going to start to catch up.
Yeah, and we're pricing that daily. I mean, we're in the what, August, September time window, or maybe I should say July, August, September time window of safrinha. I mean, they harvest in July, so we got 2 months of prime filling, growing, post-pollination. They're very dry.
Yeah.
Market estimates have gone from anywhere from 120, 124 million tons. We're kind of down around 115 to 111 with one popular analyst throwing out a 107.
Yeah.
So we're reducing reserve supplies to the world market yet again, despite what's going on in Ukraine. So that's been, I mean, but we're talking about it. That's priced in. It's in the market today. That's not a reason to stay long.
Yeah.
Now, if it gets worse, that changes it.
Yeah. Now, I don't want to put you on the spot too much here, but right now, with everything you've got I imagine you got 4 or 5 screens in front of you that we can't see. Are you more friendly corn or more friendly beans or wheat or just friendly everything, or what are you thinking right now?
I've been short corn here for first week of May. Started covering it in today. It's just not breaking like I thought it would break, despite the dollar rallying. Doesn't mean I won't come back to it.
Yeah.
But we were, in general, most of our trades, or my trades, are going to be spread related and not flat price. If we do flat price, it's going to be a lot of call spreads with futures, or risk reversals with futures, like things that you've got an out on.
Yeah.
But just pure fundamentals, looking at everything status quo today and assuming a normal yield. And I think the market's priced a bigger jump of corn acres than probably I think reality will prove. Mm-hmm. That survey we get in March, it rarely changes more than 1 million acres in June. Everybody likes to say this year it'll be different. Every time I hear that, I want to say no, it won't, because now you're back out into tail risk and dealing with unlikely scenarios. So if we don't get quite the bump of corn acres I think we're pricing, then corn could be friendly again. But the bean market, we have shoved so many beans out the door export wise. I think we have a tighter old crop S&D in the beans than we realize, in which case that'll carry to new crop, and it really puts the onus on production. We've got to raise a big bean crop. Yeah. So with a weather market, I'm friendly everything. With good weather, I think we're so high in the stratosphere that I think you got to be careful being long.
Yeah. Well, let's go into another area here. What do you think? What do you think about the invasion of Ukraine? I mean, Putin's got a plan. Do you think he's trying to rock the U.S. dollar here and knock it off as the currency of choice around the world?
I haven't finished this book yet, but if anybody has the chance and the stomach for it, read Ray Dalio's book, Changing World Order. It is fantastic, and it was written back during COVID, and it literally almost spells out this situation right now, where 3 major world powers, Russia, China, US, start battling it out. The US currency, in terms of empires of world history, we are doing a lot of things domestically that are putting our world currency domination and our status as the #1 nation in the world at risk. Yeah. And without getting into politics and all that, there's statistical analysis in that book that prove when you have a very dynamic left and right, or a move away from the middle politically, you have a bigger chance of a civil war, whether it's a hot war or a cultural war or a financial war. It starts to split the country, weaken the currency. We do a lot of things that don't we're throwing a lot of money out that is not invested money. It's just spent money.
Yeah.
It's okay to buy a truck if that truck is going to make you money, but if you're going to buy a truck because it looks pretty, that's a depreciating asset. So kind of the same thing. Instead of repairing locks and dams and building out infrastructure and things that dollar is going to go and make $2 or $3 or $4 more dollars, we're just giving $1 to somebody for giving debt or whatever. So we're weakening our currency from within. China's going to sit back and just let us do it. They're crazy to get in our way.
Yeah.
And then they get the added bonus of Russia kicking off this deal in Ukraine. And Russia is a massive country with a massive amount of natural resources. The world natural resource shortage right now is why commodities are doing what they're doing. China is the biggest consumer of these. One of these two countries is going to weaken themselves and they're going to make a move.
Yeah.
This is could be 10 years, 20 years, it could be way out there. But so I don't know what to make of the macro scene or what Russia's doing here. I can make all kinds of guesses. I think there's a certain amount of beat our chest pride for Putin and wanting to build back the old Soviet Union. I think there's a bigger play in terms of buddying up with China and
maybe India.
Doing something like this that could disrupt the currency. And then you just have culturally, these are two countries that don't view human life the same way the United States does. I've traveled throughout Ukraine, China, most of Asia, and they have a different view of human life. And whether it's right or wrong, it's different than ours. We would say it's wrong, but to them it's okay. So you travel enough, you start to take a step back when you're the foreigner and say, are they really wrong or not? In our value system, yes, and theirs no. So I don't know what they're doing or why, but I know it's really scary when they start to take over the major Black Sea ports in terms of world food. Food starts to become weaponized when you can hold it off the market.
Yeah. Yeah, this is very dangerous ground we're on right here. What was the name of Ray's book again, Nathan?
I want to say it's Changing World Order. I shouldn't quote it if I don't know. I'll have it here. The Changing World Order. It's a pretty intellectual read, but it is fantastic in describing exactly things going on. It's got statistical analysis behind it. It breaks down the Chinese dynasties going back hundreds of years and how they rose and fell and the things that it's history repeating itself as these empires keep falling apart.
Yeah. Isn't it amazing how we don't learn from history? Isn't that crazy?
It's yeah. It can be reversed, I think, but you need a strong leader. We need to move back to the middle. We need an understanding that, I mean, you go back to the 30s and 40s. I mean, they built the Hoover Dam under budget, faster than it could have been done, and get back the money they didn't need. Well, that would never happen today. No. So we need to kind of shake up culturally this, kind of getting out of bounds here, but no. Keep going. Whole, I deserve this because I'm alive thing instead of I need to go earn it. And we need to change that mentality. Yeah,
totally agree. Hey, Rachel, could you type that in the chat, please? It's Ray, I think, Dalio, D-A-L-I-O. And then the book is The Changing World Order. If you could put that in the chat, please. Thank you. Let's see. Yeah. Look at Gary. I'm sorry, I don't know your last name, Gary. Look at where
That's
Ray Dalio. What's that?
That's my dad.
Oh, that's your dad. Hey, Dad. Look at where Ray Dalio and BlackRock are investing now. They are invested in China instead of the USA. Yeah. I mean,
his job is to be agnostic and invest where he sees returns.
That's right. That's what he's supposed to do. That's exactly right. So, Nathan, this is dangerous. I mean, this is scary because if for some reason we lose the U.S. dollar as the currency of trade, I don't know what's going to happen then.
It's hard to predict. I mean, it never plays out like you think. I'm sure everybody wants to say, well, then I'll go to China, but it may not necessarily do that. You've got a $3 trillion asset in crypto now.
Yeah.
Don't ask me to explain it, but I mean, that's a force to be reckoned with.
Yeah.
We've created $3 trillion of wealth, or what do you call it, equity, out of running computers and just people willing to bid it up. It goes back to what we talked about with corn at 730. They're buying it with the hopes that somebody's willing to pay much more than where they bought it today, later.
That's right.
To sell it back out.
Yeah, that's right.
Maybe the purist isn't. The purist thinks that I'm just going to hold it and that's my new currency. But it's funny, they all value it in dollars still.
Yeah. Yeah. And all of the trade, everything you've talked about, you worked at JBS, you worked at Zeno, all these things, it was all based on the US dollar trade, right? Or the dollar was the backing currency. So I assume you were to do those calculations of whatever their currency was in relationship to the US dollar at that time of trade.
Yeah, I mean, everybody's trading in dollars. The buyers are going to have a currency desk if they have to convert to yen or whatever currency you're trading in. But we typically, we would watch the dollar index, but we didn't have a currency position per se. Now your ADMs, the Cargills, those guys will have that because they have enough operations in those other countries that they have a hedgeable risk.
Right. Right. Well, this has been great. And I want to say something to your dad. Listen in, Gary. Gary is a consultant he's a regenerative consultant. So please reach out to him sometime. He's done a lot of great things. So keep up the good work. Nathan, what would you like to close with here? Take us home. Last couple thoughts you got, and we'll let you go here this evening.
Oh man. I guess one of the messages that we're really pushing, it's kind of counterintuitive, is don't get lost in the weeds of the individual daily fundamentals. You got to run a business. If you can make really good money for your business, you need to make steps to protect that opportunity. I've been in, it's not the same as farming, but I've made trades that have piled on so fast and so high, and you sit there and go, wow, this is wonderful. I hope it happens tomorrow. And then all of a sudden, it may be day 2, day 3, you're like, I've never made this much money so fast, but you forget to get out. And then day 4, it's just, and all of a sudden, 30, 40, 50, 60% of it disappears. And the gut-wrenching feeling of I had it and it is gone is so important to avoid.
Yeah.
It doesn't mean go stick your head in a pillow and do nothing, but you've got to respect that we are in some really, really frothy times, that things are going to move fast and we're not going to see it coming. And so make decisions based on, if I lose all of this, can I live with it?
Yeah, and never risk more than you can afford to lose. That's exactly right.
Avoid short futures, naked short calls, overpricing grain. I mean, if you overprice grain and we have a crop problem, we will move so high and so far, so fast. I think you will see people go broke over it.
Yeah.
And it's that dangerous. Doesn't mean don't do anything, but it means be very cautious in the things you do.
Yeah, and that could happen, Nathan, because I mean, when you get these markets that are just, casually moving higher, that doesn't really scare anybody, you think it's going to go to the moon. But when you start getting all this volatility that we're getting, you panic and you start to make those cash sales because you don't want to miss the train. You don't want to miss this opportunity. Well, if all of a sudden you've got a guy who's sold out to 165 bushel corn and he only raises 140 bushel corn for whatever reason, there's going to be trouble.
Yeah. And that insurance policy is not there. You can't pick it up.
Yeah.
Insurance is extremely important. It's not to downplay it, but it's not the parachute it needs to be in that instance.
Yeah, that's right.
If you're going to farm in a large way and have any leverage at all, I think you need to be able to explore some sort of options or futures with options type positioning to get past 50% sold when the tea leaves read right and there's good money on the table.
Yeah.
Because that also gives you this basis flexibility. There's 75 cents in basis and beans just from having flexibility to have shopped at harvest till now. And you can't do that if you start committing cash grain now.
That's right. That's right. So yeah, I think we're I hope there's folks out there with still some cash left, because I feel like the basis is just going to stay strong all the way.
Make them come get it.
Yeah. I mean, cash is king. So, and it always has been and always will be. All right. Well, give us give us some websites that folks can go to. I know you've got a service. You've got Light Touch. You've got All Touch, whatever you call it. Tell us about how we can get a hold of you.
So it's not just me. So I work mainly on strategy. I've got work with a great team of people: Susan David, Jeff Fichtelman, Jake Weiner. These people. Jake has been in the business. He was training me when I was an intern at CGB. He runs 50 some farms, I believe, here, Indiana, Ohio, where he will manage basis, manage cash sales. He will work with the elevator on where to place hedges. He does not do futures and options. Any of those questions will come my way. Susan works with me. Jeff and Susan and I have a company called Grain Bull. It's a new subscription service where we kind of, our purpose is to try to break it down 3 or 4 bullet points per commodity or less, focus on what's really important, try to remove the noise, and make it very easy off the shelf. It's under $500 a year, and we do something every day. Monday is a technical. We kind of rehash the COT report, look at the charts, and Jeff does a lot of work on the technical side. Tuesday, Susan and I kind of help her with the fundamental. Here's main fundamentals for this week. Wednesday, we do a live Zoom call at 7 a.m. You can call in, ask questions, and basically like this, only we try to shorten it to 15 minutes and I don't have to talk so much. Yeah. Thursday, Susan writes a fantastic letter that is more macro related. It's bullet points and pictures and graphs. It's a spinoff where I think she had over 1,000 people reading it when she was at CGB. It used to be Tough Talk with Susan or something like that. Now we call it the No Bull.
Okay.
There's 4 dots after the bull. You can figure out what that means.
Yeah.
And Friday is just kind of a recap. And so that boils down, and it's $500 a year. It's pretty reasonable. We have a brokerage service. We have a full service where we will sit down and customize to your farm. So just go on the website, give us a call, send us an email, and we'll figure out what works.
Yeah. See, I look at you and what you're doing there, Nathan, exactly the way a person needs to draw a baseline. And if they're getting ready to make a major change in the way they're farming, like say they're in full tillage now and they want to go to no-till cover crop, be more regenerative, we've got to establish that baseline. So you come in and collect all the data you possibly can. And then as you move forward, you see is this working or is it not working? And I'm assuming you're in that same camp. You need to collect as much data as you possibly can to help, I guarantee is too strong of a word, but help secure that they're going to have success in this marketing program.
Yeah, and that's our goal. The amount of information we as a group will go through in a day is mind-boggling.
Yeah.
Jeff's been doing this 20 years. He's managed billions of bushels. Susan's been a merchandiser for the St. Louis market since she got out of school, started with working with us a year and a half ago. I've been trading professionally for nearly 20 years. And it's been a really fun time for us as a team because we don't have the corporate shackles on us and we can kind of do what we want. So we change a product, we add a product. We will be launching a managed money product here in the near future where we will kind of an investment product.
Mm-hmm. Well, good.
So there's a number of things going on as we kind of build this out.
And you're back home on the family farm now, is that correct?
I moved back to where I grew up. I live about 15 minutes from the house I grew up in after living in Milwaukee, Indy, Louisiana, Colorado, and then moved back home. So
Wow.
I manage my brother, mom, and I. We have a organic soy, any grain, organic and non-GMO grain conditioning facility.
Yeah.
A lot of
Yeah.
overseas containers.
That's great. We gotta keep those, you get folks in mind. It's Greensburg, basically, right? Is that correct?
Correct. Yep.
Greensburg, Indiana. I mean, I'm out speaking and preaching that we need to be commingling these crops, and what a better place to get them separated than a facility like yours. Bring wheat and soybeans in and together, and they leave as two separate
Yeah, we can do that.
two separate crops. So stuff like that. So, well, Nathan, I can't thank you enough for being on. Well, maybe we'll have you on again, but we gotta remember that these are times that I never thought we'd be here. 2 years ago, I didn't think we'd be here. And here we are. So we've got to take advantage of this. And the important thing here, folks, is to keep your head up and stay positive, because there's so much that goes on in your life and with the farm. And then if you look up and see that beans are down 55 cents one day, which they're going to be one of these days.
They almost were it 2 days ago.
Yeah. And then you think you've missed everything. So you've just got to sometimes seek professional help, and Nathan and his team are here to be that help if you need it. So Nathan, thank you so much. Have a great evening, and good luck with the rest of the spring.
All right, you too. Stay safe.
Thanks. Bye-bye.